Get ready for a thrilling ride through the world of finance. The yen's rise and the Kiwi's jump are just the beginning of this economic rollercoaster. The yen's rate hike prospect. The Bank of Japan, BOJ, has markets on edge, preparing for a potential interest rate hike as early as next month. This shift in focus from earlier concerns about the US economy to the inflationary risks of a weak yen has sent the yen soaring. Two sources familiar with the BOJ's thinking revealed to Reuters that the central bank is aiming to remind markets that a December rate hike is still on the table. But here's where it gets controversial. The Japanese currency has been under pressure due to growing worries about the country's fiscal health and the central bank's cautious approach to further rate hikes. Traders are on high alert for any signs of intervention from Tokyo to stem the yen's decline. Some analysts believe the US Thanksgiving holiday could provide an opportunity for authorities to step in and make a move. Carol Kong, a currency strategist at Commonwealth Bank of Australia, CBA, commented, "The Thanksgiving holiday will mean thinner liquidity, creating an opportune moment for Japanese authorities to intervene. The impact on markets will be amplified during this time." The Kiwi's hawkish tilt. Meanwhile, across the globe, the New Zealand dollar, NZD, is soaring after the Reserve Bank of New Zealand, RBNZ, lowered rates to 2.25% as expected but provided a hawkish outlook on future policy. The central bank's forecast indicates a cash rate of 2.2% in the first quarter of 2026 and 2.65% in the fourth quarter of 2027. The Kiwi's strength is evident, trading 1.2% higher at $0.5688. Traders have sharply trimmed their expectations for further rate cuts, with Jared Kerr, chief economist at Kiwi Bank, noting, "The market had about 2.15% priced in, but we got 2.2%. It's a subtle difference but enough to signal that downside risks didn't materialize." A dovish Fed path? In broader market news, the dollar eased on Wednesday as benign US economic data reinforced expectations of a December rate cut. Investors are also speculating that the leading candidate for the next Federal Reserve chair may steer policy in a more dovish direction. Data from Tuesday showed US retail sales rose less than expected in September, and producer prices were in line with forecasts. US consumer confidence took a hit in November as households worried about jobs and their financial situation. All these factors have traders betting on a Fed cut next month, with markets pricing in an 84% chance of a 25 basis point move. CBA's Kong commented, "The overnight data paints a picture of a slowing US economy, strengthening the case for a near-term rate cut by the FOMC." The euro edged closer to the $1.16 level, while sterling advanced ahead of a high-stakes UK budget announcement. And this is the part most people miss. A report from Bloomberg News suggests that White House economic advisor Kevin Hassett has emerged as the front-runner to be the next Fed chair. Hassett, aligned with President Trump's preference for lower interest rates, could push for easier policy if appointed. Rodrigo Cattrall, senior FX strategist at National Australia Bank, said, "Hassett's appointment would likely reinforce the administration's push for easier policy." So, what do you think? Will the markets continue to react to these developments? Share your thoughts in the comments below.